there is another stock that will be in focus as of today, and that is the FMCG major Britannia that reported a 47% year-on-year rise in consolidated net profits for the March quarter to 559 crores on the back of an over 13% growth in the revenues to 4,000 crores. Now, FY23, the company reported a 52.3% year-on-year rise in the consolidated net profit to 2,322 crores. My colleague Winnie, who tracks the sector very closely, is here with more details. Take it away, Winnie.
So good morning, and starting with Britannia, when you talk about it, the numbers were a good set of numbers, especially on the operating performance front. It was a very good set of numbers. Revenue saw a good growth as well. When you look at the other operating revenue, that saw a sharp rise as well, and that was mainly because the company had started receiving the amount for the PLI scheme which they had won, and this is for the last couple of years. The company also highlighted in its con call that going forward, every quarter there will be a 15 to 20 crore amount that they'll be receiving for the PLI scheme. So all in all, it was a good set of numbers that came in from the company. More of a pricing-led growth this time around. Our volumes are at around 2 to 3% is what the company highlighted. Margins have remained flat sequentially, but look at on a year-on-year basis, I beg your pardon, a strong performance coming in over there. The company further highlights that going forward, obviously this pricing-led growth will taper off. Price cuts will lead to sequential contraction, maybe slight bit in terms of the margins of the company as well. But as of now, all in all, it was a good set of numbers coming in from Britannia. Enhanced direct reach is something that is fueling the top line growth as well. Bread is continuing to see a good growth and marching forward as well. And in terms of brokerages, they seem to have increased the target price for Britannia as well. Jeffries has increased the target price to 5,300 rupees from previous 5,200 rupees, maintaining a buy rating on the company post the beat that came in Q4's margins for Britannia as well.
Right, Vinny, thanks for that. But stick with us while we listen in to what the management had to say on where they see gross margins and volume growth headed in FY24.
It will hover around the same, maybe, a percent here or a percent there. Won't make a big difference. The point is that we might have to make a few changes to pricing in certain brands, in certain packs. So we don't want to become, only margin hungry and not continue our march on revenue growth, volume growth, and market share growth. So it has to be a balanced play, and that's what we are trying to do. And that's how we've, looked at getting the golden triangle every year. But I don't worry too much about volume. I'm more worried about the number of packs that we sell. So I would want to see aggressive growth as far as number of packs that we sell. But yes, you're right. Even volume growth will definitely pick up in this year.